As the stocks are just about to kick off, and there they go. Don't forget, consumer confidence numbers are coming out in about half an hour's time. Actually, let's get to Kevin Cook again at the CME, because as we're watching stocks open, Kevin, and I mentioned consumer confidence, how big is that going to be? How big of a factor in the next half hour for the markets?
Well, we got that dip last time we heard from Michigan sentiment, and that's to be expected. Consumer confidence is going to be one of the most volatile numbers out there that we look at. So we expect it to kind of sawtooth here. Looking for a number in the mid-60s. If we got something dramatic like a 61, that could put a dent in Friday's trade action. But the consumer, we all know 70% of the economy. The real news, I think, in the past couple of weeks has been the number of mortgages that are underwater. 3.4 trillion in U.S. homes, about 15 million homes where the mortgage value is higher than the value of the home. And that is going to put a crimp on consumers. They'll continue to contract. Job losses there will equal bank losses. Mm-hmm. So that's one thing we're watching closely.
Okay, so a lot to watch, of course, today. Thanks so much, Kevin Cook at the CME. And I want to get to Scarlett Fu, who's looking at the early group and individual movers. Scarlett.
And Betty, as you might expect, technology stocks are really leading the way higher here, with the S&P Info Technology Index up better than 1%, almost 1.5%. All 10 industry groups in the S&P 500 are firmer. And in terms of the laggards, we are seeing those defensive stocks, healthcare, staples, and utilities fall behind a little bit. They are higher, but just marginally. Now let's get to this tech stocks, because the big name out there is Intel. It is up, trading above $20 a share after boosting its third quarter sales range on stronger than expected demand of microprocessors as well as chipsets. Sales will be around $9 billion this quarter versus the previous estimate of $8.5 billion. Gross margin, and this is a key metric that investors look at when you talk about Intel, it'll be in the upper half of its previous range of 53% plus or minus 2 percentage points. You can see that its smaller rival, Advanced Micro Devices, getting a boost up. Texas Instruments, another big chip maker, also rising better than 1.5%. As for some of the other movers that we're keeping an eye on, also within the tech sector, you've got Dell, which reported earnings last night, better than expected numbers on cost cuts. Its bigger rival, Hewlett-Packard, rising as well, above $45 a share. And the big mover in the pre-market was AIG, after CEO Robert Benmosche said that he may wait up to 3 years before he sells overseas life insurance units. And presumably by that time, he and AIG can command a higher price with this economic recovery taking root. So that is something that investors like right now, and that stock is up better than 13.5% to $54.30 a share. Other financials that were active in the pre-market include Citigroup and Bank of America. Of course, these two stocks were up at least 21% so far this month, and J.Crew on better than expected results. And speaking of better than expected results, let's go now to Monica Bertrand on Tiffany.
Well, I'll tell you, when you look at it, Scarlett, Tiffany shares really are running this morning up almost $3 in trading, a jump of 8%. But a couple of headlines that are coming across off that conference call right now. One is that Tiffany sees holiday sales unchanged from a year ago. So we'll see if we can continue to hang on to those gains this morning as well. Tiffany CEO saying they're holding firm on no holiday promotions and maintaining a mix of prices this holiday season. Now, for the quarter, the company's second quarter profit fell, but it was less than analyst estimates after sales were better than projected. Second quarter sales in the U.S. fell about 27% compared to a drop of 34% for the first quarter. Tiffany also boosted its full-year profit forecast. Now, a couple of other headlines out of that conference call. Tiffany says the tide slowly moving in its favor and says the smallest sales drops were at the lowest price points. Now, Tiffany expects further improvement again in the second half of the year, but that additional headline again of the holiday sales being unchanged from a year ago. Now, this report actually confirms a little bit of data, Betty, from other luxury retailers like Gucci and LVMH that sales are stabilizing a bit. It also gives some optimism for investors about the outlook for what's coming up. Betty, and we'll have more on Watch Tiffany for you throughout the morning. Back to you.
Okay, we'll be watching for that. Thank you so much, Monica. I want to head to Suzanne O'Halloran now, standing by, of course, on the floor of the New York Stock Exchange. And Suzanne, we're seeing an early rally at the session.
Right, a lot of positive news, Betty. We have a number of companies in tech and retail giving optimistic was talking about oil earlier. Oil is at $73 a barrel. That will be a support factor for the S&P most likely today. Also, I just want to check on Intel again. Scarlett filled us in on that, but an important Dow member, an important barometer for chip stocks and demand. And a lot of investors are watching technology, which is the strongest sector so far this year. It's up nearly 40%, and many strategists say that this sector has to continue to move higher for broader gains in the market to follow, Betty. So tech, important, and that 10 a.m. consumer confidence number could be a market mover as well. Back to you.
Okay, Suzanne, thank you.